Well, welcome everyone. This is Steve Della Croce from Nutrition Practice Management, and I appreciate everyone jumping on. Today we have a special guest. It is Sal Albanese. He is a CPA. He's been my CPA for multiple businesses between my private practice as well as Nutrition Practice Management. He's been a CPA longer than I'll say, just because I don't want to give away his age, but he's definitely an expert. And we really felt like we could clear up this PPP program a bit. Sal has some good answers for your questions. That being said, if everyone could stay on mute, but please feel free to use the chat room, put in any kind of questions that you do have, and we'll be happy to answer. And I will close the screen down just so we could see Sal as he's speaking. So again, thanks for everyone for joining. Keep yourself on mute if you don't mind. And Sal, why don't you take it over?
Thanks very much, Steve. Appreciate the invite. And by the way, I've been practicing for over 35 years, but I was 2 years old when I started, okay? Good afternoon, everyone. As Steve said, I've been Steve's accountant for a number of years. I have a full-service CPA firm here in Long Island and also in Manhattan. And as I said before, I've been practicing for over 35 years. Steve asked me to talk about the PPP program, which I'm sure that we all have heard about it. Cannot hear it, if you have the TV on, I'm sure. Here's what pretty much what I'm going to be talking about. Number one is going to be, what is the program? How do you apply for it? Who qualifies? What do you do after you get approved and the funds are in? All of those requirements. I will try to speak very fast because there's a lot to cover. But I think most important, it's probably most useful if I allow some time for questions and answers. So I'll zip right through quickly, and then of course we'll open it up for questions. So the PPP program, of course it came due to the COVID-19. Congress realized that they had to do something to help both employers and employees, and help companies retain their employees as best as possible during this hard time. As you all know, there have been a couple of phases. The first round, the funding went very, very quickly. The program was in great demand. Of course, it's monitored through the SBA program along with your local commercial bank. So between the two of them, they were hit with this tremendous package. They were not ready for it, but after they opened up the application, they ran out of money pretty quickly. Of course, Congress realizing that, they came out with another set of funds, and the second time around, I think there were the banks were ready, and the SBA was ready, and most of my clients that have applied have already received their funds. Okay, so what is the intent of this PPP? Again, it's to retain existing employees. For how long? Well, no one really knows, but the idea was for companies to be able to keep their key employees on salary or on payroll. And by doing so, once the governors or the president gives us the green light to go back to work, they would be ready, as opposed to laying everybody off, applying for unemployment, possibly losing the employees, and not having a business once we get the green light to go back. So that's number one. Number two, they provided these funds for other reasons, and that is, by keeping people off of unemployment, they don't have unemployment funds to pay out. So as a result, the SBA has provided these loans, quote unquote loans, that are forgivable. So they're giving us free cash, if you will, as opposed to paying it through unemployment. That's just my 2 cents, my feeling on it. So how do you apply for one of these loans? Well, usually most banks, like I said before, they were not ready for it, and they were not really being paid any significant amount of money. So most banks didn't want to deal with you unless you were a customer, a business customer. So everyone went to their commercial bank, looked at the application. It's a very simple application. Um, it probably, if you're ready with the documents, and we'll talk about it, you probably can zip through it in 10, 15 minutes, maybe 20 minutes. Maybe the first time that they did this, it took a lot longer because the program was defaulting and on, but now things are pretty smooth. So who qualifies? Well, anyone who's an employer, who's a self-employed individual, someone that has a DBA, for example, or an LLC, a partner in a partnership, or the partnership, an S corporation, a C corporation, trusts. I mean, almost anybody can apply as long as you have less than 500 employees. Okay, so it's designed for small business. How do you apply? Like I said, you go to your commercial bank. Now, there are some checklists, and that is, there are some requirements. If you're a 20% or greater owner, you must apply. And all owners, more than 20% ownership, need to apply. They basically are doing a little check. They want to make sure you're a good citizen, you're not a criminal, you haven't violated the laws, you haven't, pulled a fast one on the SBA, for example. But assuming none of that took place, then you're eligible to apply. What is the amount? The loan amount. Remember, this is a loan. Okay, it'll be a forgivable loan, but it's a two-step process. So this loan is basically calculated by taking your average monthly payroll costs. Okay, and how do you do that? Well, you can look at the last 12 months worth of payroll, your year-end summary, your W-3, for example, divide by 12, and you have an average monthly. That's one way of doing it. There are other more specific ways. There may be a seasonal business, for example. I have a CPA firm. During tax time, we're pretty staffed up, work long hours. So you may want to approach it like that also, by looking at a certain period. And you come up with an average monthly, payroll cost. You multiply that by 2.5, and you come up with your loan amount. So, for example, if your average monthly payroll is $10,000, multiply that by 2.5, that's $25,000 loan. Of course, when you're applying online, the commercial banks are required to do some due diligence. They will ask you to upload some documents, and depending on the nature of your business or the type of business you have, it could be a W-3 or 4 quarterly 941s to basically substantiate your employees and your payrolls. If you're doing business as or DBA or Schedule C, they may ask you for the Schedule C or the 1040. If you're a partner in a partnership, they may ask you for the K-1s. Okay, so you need to be ready with those documents. You upload those documents. It goes to your commercial bank. They review it. And after a period of time, if you were in the first round, you may have waited 10 days, 2 weeks. If you're in the second round, a little, much shorter than that. So now you get your okay that, yes, you've been approved. Next step is it's going to be funded. You will see in your commercial bank account the funds. I actually got approved last Friday. I did not make the first round, but I did apply the first round, almost the first day. But I was with Chase, and the larger banks took a little longer than the smaller banks to approve you. But next thing you know is I get a notification that, yes, I've been approved, and 3 or 4 days later, I got funded, and the funds are in the account. Great. Now what? Well, it depends. You need to look at like I said before, your average payroll. Now, in order for the loan to be forgiven, okay, remember, up until now, it's a loan. And the loan comes with a 1% interest rate, and the term is 2 years. So if I take this money that I received and spend it on business expenses, guess what? I will have to repay the loan, the full amount plus interest, unless I spend it for quote unquote qualified expenses. Okay, so what are qualified expenses? Again, the most important item and the reason why they came out with this is to retain employees. So the number one item is payroll and payroll costs. Okay, so the rule is that I need to spend the money for payroll. Well, how much? At least 75% of the loan amount has to be spent for payroll and payroll costs. That's a huge, huge, most important factor right there. Number two, when we applied for the loan, we had to indicate how many full-time employees we had prior to this virus. And I have 10 accountants on staff, so my number was 10 basically. Now, why are they asking that? Well, they're asking that question because they want to make sure that I retain the 10 employees during the period of time that they're paying me for, that I'm supposed to be using this loan amount for, which is basically for the next 8 weekly payroll checks. So I received the funds last week. This week is the first weekly paycheck. That's week number 1. For the next total of 8 weeks, I need to keep track of my payroll costs and make sure that it's 75% of the loan amount. Number 1. Number 2, number of employees. I had 10. I need to have 10 also if I'm going to retain 100% of the funds and have them all be forgivable. Okay. Those are the 2 main rules. Okay. Number 3, the balance of 100% of the loan. I said 75 is for payroll. The other 25%, they will allow me to pay certain expenses, such as rent for 2 months. If I own my office space or a building, I could pay my mortgage interest for 2 months. I could also pay my utility bills for 2 months. Okay, so very important, 75% in payroll costs, 25% for other non-payroll items. Rent, utilities, mortgage interest. Number of staff, number of employees, they should stay the same or more. Okay, so I could have, if I have 10, I could hire a few more. Wonderful, I'm okay with it. Basically, the SBA loan, it will pay for my payroll, all of my staff for the next 8 weeks. Okay. Now, as I said before, it's a 2-step process. The first one, you apply, you get approved. The second one, after you receive the money, you have to keep track. And then 8 weeks later, you need to apply again. You basically are applying through the same commercial bank that you went initially. And you're applying for a loan forgiveness. It's an application. You have to prove again at that point in time that you've spent the money according to the rules that I just went over pretty much. That the funds were spent for payroll and the number of heads are the same, and the other 25% went for the qualified expenses. Okay, ton of questions regarding, and I'm sure you're all thinking about them. Well, what happened if I had laid off all of my staff when we were basically forced to work from home? That's okay. The staff would have went on unemployment. They would have received, the $600 a week from the federal government for 13 weeks. And they would have gotten half of, in New York State anyway, half of the salary amount, but no more than $504. So at this point, after I received the funding, my obligation would have been to hire these people back. I would notify my staff and say, you have your job back. And as soon as that happens, what happens to your unemployment? On the normal course of business, if you're collecting unemployment, every week they ask you, what have you done the week before to search for employment? Well, the answer is, I have a job. Sal offered me my job back. So they are not entitled to collect any more unemployment. The issues are, depending on the industry, and I'm sure you see it right away. I just said $600 from the federal government plus another $500 from unemployment. That's $1,100 a week to stay home and do nothing. What if their weekly pay was less than that amount? They don't want to come back to work, do they? So what do? Do you fire them? Or do you replace them with somebody new? These are some of the options and some of the questions that some of my clients are going through right now. And that is, what do? They received a loan amount. The employee doesn't want to come back. They're not going to be happy. Well, you have a business decision to make. Number one, if they don't come back, now you're not able to spend your loan amount, 75% of the loan amount, on payroll and payroll related costs. So what happens in that situation? Well, you're going to have to repay back to the SBA the loan balance plus interest if you keep it. There's a ton of other issues. What do the employees do if, for example, you hire them and they don't have a place to go? What if I'm a restaurant owner? They're not allowed. They're closed in New York State. Restaurants are only able to do pick deliveries, or they're not able to dine in a dining room. So what is those waiters going to do if I hire them? They're going to stay home and do nothing, basically. Again, the intention for the program was to retain the employees. Of course, when I work with my clients, I try to have them think outside of the box. Pretty much, do any training that needs to be done. If there is any training, if you're a manager, you need to plan ahead on what do you do when you are given the green light to open up again, with all the the social distancing and all the requirements. That business plan that you always wanted to write, that you never had the time to write because you were too busy with the daily functions. This is the time to do those kind of projects. And how are you going to handle the new normal? With these Zoom meetings, I'm thinking, hey, maybe I can do these with my clients. Perhaps I don't need to go to the clients and visit them any longer, So anyway, there's a lot to be done. There's a lot of planning, and there's a lot that can be done and not feel that you're just receiving funds for not doing anything. I don't know if I've confused you. Hopefully not. I'm just looking at my notes quickly. 25 reduction. Okay. Other questions is, can I hire my family members to replace my employees that are collecting unemployment? Well, like with any other situation like that, during any other time, you need to justify what your family members are doing for your business. If the answer is yes, they're able to do some work for you, then hire them. There are questions on what is a full-time employee, the definition of it. I have salaried individuals, and obviously those are full-time individuals, but I have part-timers. They work on I pay them by the hour. Usually 30 hours is equivalent to one full-time employee. So when you're doing your head count, you need to figure out that, hey, if I had 10 employees when I applied for the loan, I need to prove that I have at least 10 employees. I could have more. I could have 12 or 11 or 15, but I need to have at least 10. If I have less than 10, what happens? Well, you take a proportionate amount of the loan amount, and that becomes repayable. It's not refundable any longer. So anyway, though, that's pretty much it in a nutshell. Steve, I don't know if you have some questions, perhaps I'll take at this point.
All right, thank you so much, Sal. We all appreciate you giving some time. So yeah, we did have a couple questions, and Lorraine had a good basic question, so let's start with that. And it may have been answered, but let me just repeat it just in case. So doesn't the money need to be used within 8 weeks? And if we don't have the green light to open up and rehire employees after 8 weeks, what do we do at that point? And like you said, we don't know when things will open up again. But so does that money need to be used during that 8-week point, or can we hold on to it for a little bit just in case?
Well, the answer is yes. And think about it for a moment. You have to spend it within the 8-week period. So let's do some math. Okay. So when we did the initial loan calculation, right? The rule is you take the average monthly payroll cost and you multiply by 2.5. Okay, that means what? 2.5 months. 2.5 months is approximately what? 10 weeks, maybe 11 weeks. But you have to spend your payroll amount within 8 weeks, right? So it's intended to have money left over. And the money left over is to pay the other expenses, right? The rent, the utilities, and other employee benefits.
Do phone and internet count as those expenses because they're part business expenses?
Yes. So on the utilities, you would think any utility, whether it's electric, gas, water, internet. There are others, but basically any utility that you can think of is part of that. Your rent, obviously, is your rent. Your rent, if you're paying real estate taxes that's part of your lease as additional rent, that's included. So all rent expenses. But to get back to the question, um, remember when let me use me as the example. When I applied for the loan, I had 10 employees. Okay. So I received the loan last Friday. I hired my employees back. Well, they were on straight through. I didn't lay them off, but let's assume that they were collecting unemployment, right? I offered their job back on Monday. So they were available to work for me. Now, what kind of work would they do? CPA firm, we're considered an essential business, so they could work. We're all working from home right now. But if I'm in a restaurant owner, they don't have any work to do they? They have other type of work that they could do from home, or maybe they could, redesign the dining room or whatever. But a few people do, but others don't. So you basically are paying the individuals to do nothing. Okay. Which is the same, if you really think about it, either they collect unemployment insurance, unemployment benefits, right? Or they take the check that I'm giving to them, which I got from the SBA. Okay. But if you have a functional business, this could be a very good thing for you. User is online. You know what I'm saying? If I could keep all of my employees working, guess what? For me, it's a grand slam because they're working. Maybe they're not as efficient because we're not in the office, but I'm having 8 weeks worth of payroll taken care of, of it for me, which is nice. Now, like I said before, the issue is they don't want to come back because they may be making too much money on unemployment. So your job is to make a decision. Do you wait or do you replace them? You can replace them and spend that money with new talent. But now you have to weigh the pros and cons of, training a new person versus what you had before. So what I find is I have a lot of clients in the construction industry, and they have a lot of employees, and some of them are like, this is like a godsend. I've been dying to get rid of this guy or two people. Guess what? I'm doing it now. Why? Because they don't want to come back because they're collecting too much on unemployment. They just replace them. The ones that they want to replace. Obviously, you're not going to do that with the key employees.
Right. Now, do we have to report this? I know that there's a portal. I think, some of us, especially with Medicare, there was a portal where we kind of, we reported what we accept, if we accepted the funds and so on. But with the commercial banks and the government, at that 8-week point, do you have to report, or when do you have to, and where do you have to report how you use the funds?
Okay. Well, first of all, I think one of the other people in attendance asked the question about, I don't see anywhere in the application that this is a forgivable loan. So first of all, when you receive the money, it's a loan. You're signing that you're going to repay it back with interest. Okay. If you look at the application on page 2, there is one item, one line that says that it could be a forgivable loan. All right. So the my understanding is that we, after we accept a loan, 8 weeks later, and of course I have a tool that I've designed already to keep track of week by week to see what my forgivable amount is. Okay, at the end of week 8, I need to reapply with the commercial bank and ask them for the loan to be forgiven. And here's my proof. And my proof will be my payroll records for the 8-week period, okay? Whether it's the 941 or whether it's a WT or whether it's just a printout of all my paychecks, but I need to provide some proof that during this 8-week period, I've paid salaries and wages and et cetera, employee benefits. Now, what are employee benefits? If I pay health insurance for my employees, whether it's in full or a portion of it, that's a payroll cost. Okay. If I have them participate in my pension plan, that's also a payroll cost. So that profit sharing contribution or that match to your 401k, those are all, payroll costs. Okay. And you need to reapply and ask for the loan to be forgiven. The bank will ask you for whatever proof they feel that's necessary. So at that point, you need to prove to them that you've spent the money in accordance to the key matters, right? The 75% of the loan amount going towards payroll costs, 25% going to other non-payroll costs, and also the number of heads, the number of bodies, full-time employees has to be at least the same as what it was before we went into this.
So a couple questions. I want to come back in a second to what's forgivable, what's a loan, what's a grant. But a lot of dietitians are either sole proprietors or single member owners of an LLC. Some don't actually take payroll, right? They just pay themselves in one way or another. So let's say it's just one person in the business doing all the work. How and we're not a clear payroll month, week by week check.
Got it.
So what's the process there? What should we
expect? Okay. So you're a single owner. You could be a DBA, right? Doing business as.
Or DBA, sole proprietor, LLC, all the same.
Sure. All reported on your tax return, your personal tax return, Schedule C, right, of your 1040. Okay. So what you would provide in that situation, when you first applied for the loan, to come up with your average monthly payroll. Now, I keep on saying payroll because those are the rules, but of course, the definition of payroll here is expanded, okay? And that is, if you're a sole proprietor, and let's assume that you made profit, your Schedule C profit, 120, make the numbers easy, $120,000 profit at the end of last year, you would take an average monthly amount, which is what, 120 divided by 12, $10,000 a month is what your profit was. Look at that as being payroll that your Schedule C or your DBA paid you. So that's the amount that you would include. However, there is a limitation on how much payroll you can include when you apply for the loan. And that is the maximum salary or the maximum profit or the maximum, W-2 amount that you can include is $100,000. So your average monthly payroll for anybody making more than $100,000 is $100,000 divided by 12, which is $8,333 times 2.5 months, right? Is approximately $20,000 or so. So that would be the maximum loan amount for a sole proprietor, okay, with no employees.
And if that sole proprietor was quote unquote part-time, let's say they have a full-time job or part-time job, and they're doing this business less than 30 hours a week, or 30 hours a week. It's just whatever the amount of pay they would have gotten or the profit would have been. That's the calculation.
Right. So if you were to look at, I would assume that most people either probably have filed their 2019 tax return, right? It's due actually July 15th, so maybe you haven't filed yet. Look at the Schedule C profit. If you have profit, you qualify. If you have loss, you don't qualify, because remember, you can't divide a loss, right? So
But the loss, would the loss have included, or even break even have included pay? I mean, if you took out funds for paying yourself as the owner, I mean, it shouldn't end up in a loss, but even if you break even.
okay, let's discuss that. So if you're a Schedule C sole proprietor, usually you don't have payroll, so you don't take money out. Whether you take it out or you leave it in, it doesn't really matter, right? Because it's reported on your Schedule C. You don't take a deduction for money that you take out of your business as a Schedule C if you're a sole individual. If you're an LLC, a limited liability company, and you put yourself on payroll, okay, now you could have both. You could have the payroll amount, and you could also have the net profit, which would be after your payroll amount, that you would add together. Okay.
Okay, good. All right, now we do have a specific question, and I know I had sent it to you earlier. It's from Lise. So she got her PPP loan. Her employee doesn't want to come back, not yet. Right, she's high risk for COVID. Doesn't want to leave her home, and she's getting unemployment, I believe, right? At least. So okay, I guess the question. Yeah, so she's getting unemployment. So she's furloughed, and not sure how much.
What does she do? What does she do?
What does she do? Right?
Remember,
And she's a sole proprietor LLC. Well,
okay, so I'm assuming that when you applied for your loan, you've included both the profit from your Schedule C, which is your pay, plus your employee's W-2 amount, correct?
No. Um, so I wasn't quite sure what to do. So I just included my employee because it didn't mention anything about yourself. I just give myself a salary. I don't give myself a W-2. So I just included her. So now that she's not coming back, and I think she's also making more on unemployment than she makes from me. So she doesn't want to leave that. So that's unfortunate and kind of surprising what I've learned in the past couple of days since I got the loan. But anyway, I'm wondering, okay, I can't really even use the loan now. Do I give it back because I haven't done anything with it? Can I reapply for one as a sole proprietor for myself? And is that a good idea? What do you think?
Okay, so we're trying to do damage control here. Okay. First of all, Lisa, you shortchanged yourself. Okay.
Right.
What you did is you applied for a loan based on your employee only. So now, what are your choices? Your choices are you can go back to the bank and reapply to include yourself. Okay. So your loan amount would be greater.
Right.
Okay. Or you can, since your employee doesn't want to come back, you can put yourself on payroll, if you will, pay yourself during the next 8 weeks, assuming that the numbers work out. I would have to take a look at your tax returns and see whether they work out or not, okay? But those are the two choices. But the more damaging part, which is you control, your employee should not be refusing to come back.
Well, she's saying, well, I don't want to come back yet. It's too dangerous. She doesn't feel comfortable. She does have asthma and a couple other things. And
I got it, Lisa.
I can't really say you know what I mean? Like I sort of feel like I'm caught between a rock and a hard place.
I know. But here's the problem that your employee is facing. You're not asking your employee to come back to work. You're asking your employee to come back on your payroll. She could stay home where she's protected, and she could do whatever work you have for her. She can work from home where she is now. So she has to come back. Now, most employers, what do? You're right. You're caught in the middle here. But theoretically, if this was a different time, and let's assume that you, with this particular employee, let's assume is one of those that you've been dying to get rid of, and you really want to do some damage, You call Department of Labor, they stop the unemployment, and now she doesn't get unemployment and she doesn't have a job. And you replace it with somebody else. But a lot of employers are not that cutthroat, and they choose to do what they want to do. But those are your choices. Your choices are redo the loan, get a higher amount, include yourself, use the funds for yourself instead of her. Okay, and then your decision on what to do with her.
Okay,
and
thank
at
you.
the end of the emergency, when things go back to normal and she's allowed to come back to work, assuming everything's safe for her health-wise, you can go back to normal the way it was before, correct?
Sure. And remember, what you're doing is you're spending the money over the next 8 weeks. So usually the question is, well, what happens the 9th week? I just ran out of money, right? Because you used up all of the loan money for payroll. Well, if we're still in the same situation where we're not able to go back to work, then they can go back on unemployment. That makes sense?
Tough
So
one.
you're stretching the unemployment period for the employee if they come back, possibly.
Does that help, please?
A little bit. What's hard is, so she's my admin, and of course I'm doing, Zoom and video meetings, but I still use paper charts. So she can do very limited things at home. We don't have complete EMRs. So she used to check people in, do phone calls, do a lot of in-person paperwork. And so it's a little bit hard for her to do much working remotely.
And it's a side issue, but I don't think you're alone that having that process not in place. But if you could switch to electronic, now's the time, and maybe it's better going forward as well, and gives her a reason to come back to work. Although I know the dollars don't equal out, but that's something to think about now. You have that opportunity to say maybe now's the time we switch to electronic and use the EMR to its complete ability, because you can send those documents electronically now. Something to think about.
At least I think the most important thing is that you have to make a decision whether or not you want to redo your loan correctly.
Is it going to negatively affect my credit score if I refuse a loan and then reapply for a new one?
You're not refusing the loan. You're amending the loan, because when you applied, you did not use the proper criteria.
Okay.
Yeah. So call your bank. Who did you apply through? What bank?
My bank, United Bank.
Okay.
I've been talking with them. They don't really know what they're doing.
They don't. they don't. And like I said before, this all got dumped on them, and they did a great job, getting it going and getting it funded. But you need to call them back, and you need to ask them, what do I do if I need to amend the loan? They should know how to do that.
Okay, thank you. Appreciate it.
You're welcome.
So a couple other questions. One is kind of related. So if someone's an S corp, can they include the owner's drawers as payroll, basically? And I think you answered that before. It's yes, right? Anything they're taking for themselves.
Well, this is a huge gray area, because, and let me address that. Okay, for most of my clients, if not all of my clients, they come in, and of course we do the pros and cons of an S corp, and of course I'm going to say to you, well, the distributions coming from an S corp are not subject to payroll taxes, but your salary is subject to payroll taxes. So what do? So we minimize your salary amount as much as possible to save payroll taxes, 15.5% roughly. And you take sub-S distributions. Well, those sub-S distributions is really not payroll, okay? So the salary amount is the payroll amount. So the question is, and usually some clients say, I don't want to have any payroll. I just want to take sub-S distributions. Well, the problem is, who's running that business? An employee should be running a business, or the owner, who should be an employee, should be running that business. So you need to have payroll. I think if IRS were to come in and audit you, if you only have an S corp without any employees and you're not on payroll, you would have a problem with, what I just indicated. You need to pay yourself, quote unquote, reasonable compensation. If you did that, then you would use that payroll amount. As far as the K-1s from an S corp, I've seen them being provided. I have not, as I said, most of my clients are on payroll. I have not seen any get approved just based on an S corp, distribution, but an S corp K1. But if you're a partnership and receive a K1, that qualifies because that's earned income.
Okay, that's an
Okay.
important difference because some of us are S corps, so that's
Yeah.
One other question was, a lot of us use independent contractors rather than have associates under the business, so like other practitioners as well as even some of the people who do admin work. So, are the funds that we use to pay those contractors eligible to be considered under the calculation for the loan?
Okay. Now let's think about this. So what you're basically saying is that if you have a subcontractor, you pay somebody on a 1099, that individual is a self-employed individual, right?
So they
So
apply.
I'm sorry?
They should apply for the loan.
They should apply for the loan.
Okay. And then what do you do since there was money coming out of your, account every month to pay them?
Well, there's money coming.
What are you doing differently?
Hey, Steve, there's money coming out of your account to pay my accounting fees. You can't include my accounting fees in your PPP loan amount.
Okay.
Got it?
Got it.
So, yeah. So again, it comes back to being set up, nobody anticipated this, so we really couldn't have planned for something like this. But at the same time, the example I gave you with the S corp owner, 100% with no payroll, you have to include a certain amount, small amount or large amount, whatever it is, properly. So yeah, the independent contractors, remember they're applying themselves for the PPP. You're not. Now, of course, you can apply for the remaining profit that you have, but you can't include their pay.
The remaining profit that normally wouldn't be profit because you would have been paying them?
Well, if you're a DBA and you build $100,000 and you're paying $40,000 in rent, okay, you're left with $60,000, and now you're paying $20,000 to your subcontractor, so your profit is really 40. Your PPP is based on the 40 profit, not on the 60 before the subcontractor fee. Follow?
So, and I don't want to get too off topic, and then we want to wrap up. I do have at least one more question, but if your business wasn't affected, or a lot of us were, right? We have patients who are not coming in the door and seeing us, but let's assume it wasn't affected and you could still pay that contractor. I mean, you could apply for the loan and have them apply for the loan, and then you can also decide what you want to apply for, but you still have money coming in that you would have normally just used to pay them. Is it a judgment call, just deciding whether or not everyone should be applying, the contractor and you applying for that funds? Or if nothing changed, if you didn't have too much of a downturn and everyone was okay just kind of getting through it?
Okay, well, there is a certification that we all have to do when we apply for the loan. Okay, and the certification basically, there's a box that you're checking that says that you're anticipating that your business will be affected because of the virus.
Okay.
Okay.
So that's
let me give you an example on my part. Okay. I have a CPA firm. We're going through tax season right now. Everybody's working remotely from home. So if you were to look at me, you would say, well, you're really not affected that much, right? Okay. Right. But my clients are affected. Mm-hmm. So, do I apply for this PPP? Yes, I did. And why did I do that? Well, because I may not I may be doing the work, but my clients may not be able to afford to pay me. So is my business affected by it? I think the answer is yes. Okay. Now, on the flip side, I'm sure you heard watching TV that a lot of the large companies had to give back. They applied for millions of dollars, right? I think it was the LA Lakers, if I'm not mistaken. They got $5 million or whatever it is. So right after round one, they got smarter and they basically came up with some strict rules as to whether or not you should qualify for, or you should even apply. I think most small businesses that we talk to, they probably qualified, but the larger ones not, the public companies, the Shake Shacks, that they gave back the money.
Right.
So
Okay.
I don't know if I've answered your question.
So a slightly different question came in. She says, I completed the EIDL loan application and have received the advance. I understand that this is an advance and it's a grant and does not need to be repaid. So how will it affect my PPP loan as far as forgiveness goes?
Okay. The two totally separate, programs. The EIDL program was designed to make the employer or the owner, the business, pretty much, not whole, but, give us some breathing room to the owner. Whereas the PPP is for payroll employees. Okay. There is a question in the application on whether or not you applied and received. Now you got to be careful because when you're applying for the PPP, if you had received that EIDL prior to a certain date, then you probably would have. I don't know what they would have done. I really don't want to answer this question because I'm not 100% sure, other than what I just told you. But there is a question in the application for the PPP that says that if you've applied for another similar type of loan, that you disqualified. They're basically discouraging people from applying twice. I'm not quite sure how the IDL will affect the PPP, or even if it does. I know that the EIDL is a grant, and you will receive it, and anybody that applied eventually will receive it. And they're slower than the PPP program, by the way, because the EIDL, you have to apply directly with the SBA.
Still working, right, Sal?
I'm sorry?
Still working, right? Okay, so they are two separate things.
Two separate things, one for the benefit of the owner or the employer, the company. The PPP is designed for the benefit of the employees. And remember that, we all have a hard time, trying to pay an individual who's not doing anything for us. But the program is designed to do exactly that. The person is on unemployment right now. He should go off unemployment and go back on your payroll.
Right.
Stay home and do the exact same thing, nothing, or you can give him some work to do. Okay? Look at it the same way.
I mean, part of this is doing the right thing by your employee, and the employee has to decide to do the right thing by you, and that's what's going to help you decide if they come back or not.
That's right.
I mean, we all want to do the right thing, and a lot of us have people work for us that we like. We don't want to lose them at all, but at the end of the day, if they're creating a problem for you, I mean, that could be a breaking point. So let's get one more question. Because this has math, and I think that makes things clear for people. So Forrest says, as a sole proprietor, I use the revenue divided by 12 times 2.5 to apply for the loan. So to forgive it, I can use the exact same equation, ? So all sole proprietors are used 100% of the loan for payroll right off the bat. Does that make sense the way it was worded?
I think I know what she's asking. First of all, you don't take the gross income, you take the net income. Okay? So you build out your patients or customers 100,000, you have expenses of 60, your profit is 40. So you take the 40 and divide it by 12. That will be your average, quote unquote, payroll, monthly payroll. Multiply that by 2.5 times, and you get the loan amount. Now, as I said before, I don't know if hopefully everybody followed that loan amount needs to be paid out over the next 8 weeks in weekly payroll. Now, if you're a sole proprietor, you take your your annual, which is the $40,000 in my example, divided by 52, come up with a weekly amount. You cut yourself a check for that weekly amount over the next 8 weeks. You will have money left over from your loan amount because the loan amount is like 10 or 11 weeks and you're paying yourself out over 8. So you're going to have that differential. That differential, you can pay utilities, rent, and other type of benefits so that your entire loan amount will be fully forgiven.
And again, let's just close with the forgiveness piece. What exactly does forgiveness mean?
Okay. I knew you were going to get to it. So, so you just got your $100,000 loan. Wonderful. Number one question is, do I have to pay taxes on it? Okay. And the answer is no, which is wonderful, right? So for the longest time, people saw it like myself. I said, oh, wow, it's a nice, a nice amount. My employees are being paid for the next 8 weeks. In the meantime, I don't have to pay taxes on the loan amount, which is forgiven, right? If I spend it correctly. And I'm going to deduct all those payroll costs over the next 8 weeks. That's double dipping, right? The answer is they came back and they changed the rule already. And these things are changing daily, by the way, where now the loan that is forgiven is non-taxable, but the expenses that you're paying with those loan funds are non-deductible. Got it?
Okay. Not deductible, but you still have to pay back what you don't use, right?
Correct.
Right.
That's a loan.
Only what you don't use or all of it? I guess that's...
Well, it's what you don't use. Remember, there is 4. Let me repeat it again. It's pretty important, right? You got your loan amount, you have your funds, the account. You have to know how to spend it over the next 8 weeks. And if you followed everything that we discussed right now, you have more in number of head count. You spent 100% of the funds that you received for the proper categories, 75% payroll costs, 25% non-payroll cost, including rent, utilities, and employee benefits. At the end of that period, you've spent all of the funds correctly, and the number of heads haven't been reduced. That's usually the missing part that people don't focus on. If you did all of those, then 100% of your loan is forgivable. If you didn't do all of the above, because before I got onto this call, I got a phone call from a client. A person had a salon, 9 employees. They're all on unemployment. I don't know if you're familiar with salons, but they make a lot of money in tips. Well, guess what? If you don't have any customers, you're not going to have any tips. Your salary amount is a minimal amount. None of them want to go back to work, meaning none of them want to go back on payroll that they were offered. Why? Because they're making more money through the unemployment route. Okay, so what is this individual going to do? He's like, well, okay, I put myself on payroll, I put my wife on payroll, and I put my mother on payroll. Okay. Okay, as long as you can justify what all of these people are doing. But you had 9 and you only mentioned 3 or 4. You're not going to be able to meet that 75% payroll. Oh yeah, but I'll pay myself. We'll pay each other $100,000 each. Okay, so we'll meet the dollar amount. Okay, that's fine too, but you're not going to meet the head count amount. You had 9 and now you only got 4. So more than 50% of the loan is non-forgivable. So he's going to have to repay that money back with interest.
He'll have to repay the 50% with interest at the 8-week point, assuming everything went back to normal.
Not at the 8-week period. You have up until 2 years from the date that you received the funds, but you will pay with 1% interest.
So the earlier you pay back, the less interest you pay.
Yeah, but it's 1% is very inexpensive.
Sure.
So I have a restaurant owner that he's saying, none of them want to come back. I'm just going to use the money. It's cheap money. Mm-hmm. I'm never going to see 1% interest money for 2 years.
Right.
Right.
Right. Okay. Well, again, so anything else that you're paying yourself or an employee, like a bonus, is not counted because you didn't have that included before, so it's
I'm
not. It
sorry.
could,
I'm sorry, Steve. Repeat that.
so I mean, if you decided to use more money as a bonus, for instance, so you're increasing your pay or increasing something that you're taking out, that's not what was included in your original calculation, and really you can't count that, right? I mean, that's
Right. So here's what happens. If you have less of a head count, right? So if you, let's say you had 10 employees and now during the 8-week period you have 5, automatically 50% of your loan amount is non-forgivable.
you can't just spend more on something else. It's a head count that's really the key.
Head count and dollars, both. Yeah.
Okay. Sal, this was great. I really hope everyone who was here got something out of it. Again, Sal's been an accountant for over 30 years. He's been my accountant for approaching 10, I think. We do some partnership too. And, you know, if you don't know, CPAs can work across state lines in most cases. So if you ever need help, please reach out to us, reach out to Sal. For those of you watching this on recording, you know, same here. Send us questions if you have it. We'll get it to Sal. But Sal, thank you for being so generous with your time. And I think you did a great job of explaining it to business owners who don't really think about business as much because we focus on taking care of patients. So thank you, everybody, again, for being here. And Sal, thanks again.
Thank you, Steve. Thanks, everybody, for listening.
Okay, take care.